Hey everyone, welcome back to Corporate Decoder, the place where we decode what's really going on behind the fancy corporate speak. Today we are peeking behind the curtain at Regeneron Pharmaceuticals, and let's just say they've got some news that might make you raise an eyebrow, or maybe even double check your investments. We're diving into their latest report to see if their blockbuster drugs are still printing money or if there's a new narrative unfolding. Before we get started, if you like getting straight answers from these dense financial documents, make sure you're subscribed. We also have a super helpful Discord community where we break down these reports even further. Link is down in the description. So what we've got here is a snapshot from August 1st of last year detailing Regeneron's performance up to the end of June 2025. Think of it like this. The company is telling us how they did in the spring, and it's all filed with the big watchdog, the Securities and Exchange Commission, or SEC for short. This is the official report from Regeneron Pharmaceuticals, Inc. They're a pretty big name in the biotech world, known for developing some pretty groundbreaking medicines. Now, on the stock market, their main ticket is their common stock, and you can find it trading under the ticker symbol REGEN on the Nasdaq Global Select Market. It's a highly watched stock, and for good reason, as their financial health directly impacts a lot of investors' highly watched stock. The core of this filing is about their results and how they're doing financially. They've released their numbers for the second quarter, which ended on June 30th, 2025. This isn't just a little blurb, it's a formal announcement about their financial and operating results. They've attached a press release that gives us the nitty-gritty details, and that press release is filed as an exhibit, meaning it's part of the official record we're looking at. This exhibit, number 99.1, is where the real story is told. It's the press release from August 1st, 2025, specifically covering those second quarter results for 2025. Companies put out these releases to share their performance publicly, and this filing means they're officially submitting it to the SEC. It's important to note that while this information is being shared, the SEC has a bit of a disclaimer here. It basically says that this information, including the press release, isn't considered officially filed in certain legal senses. This means it's not subject to the same strict liabilities as other parts of the filing. It's more of a public disclosure mechanism, but it's still crucial for understanding the company's performance. And finally, you've got the signatures section. This is where the company's authorized representative, in this case Joseph J. LaRosa, who holds a pretty senior title as Executive Vice President, General Counsel and Secretary, signs off on the report. This confirms that the information provided is accurate and that the company is meeting its reporting obligations. It's like the official stamp of approval from within the company. Now, let's talk about what Regeneron might have been reporting in that press release. Although the specific numbers aren't in this Form 8K itself, this document tells us when they reported them and what they reported on. Typically, these kinds of announcements focus on key financial metrics. For a company like Regeneron, you'd expect to see details on revenue from their various drugs, what it cost them to produce and sell those drugs, and their overall profit. They also usually talk about their research and development pipeline, looking for the next big hit. When we think about Regeneron, we're thinking about blockbuster treatments. Their success hinges on developing and commercializing innovative medicines, especially in areas like eye care, allergic conditions, and cancer. So the performance in any given quarter is a direct reflection of how well these drugs are selling in the real world and how efficiently they are being brought to market. Let's imagine what kind of numbers would have been in that press release. We'd be looking for revenue figures for their key products. For example, if they have a drug that treats a common but serious condition like asthma and it's widely prescribed, you'd expect to see significant sales from that single product alone. Then they would talk about their operating expenses. This includes the massive investment in research and development, which is crucial for any pharmaceutical company to stay competitive. They also have sales and marketing costs and the general administrative overhead. A crucial part of understanding their financial health is looking at profitability. How much of the revenue is actually turned into profit after all the expenses are paid? A strong profit margin means they're running a lean operation and that their products are highly valued. A shrinking profit margin, however, could signal that costs are rising or that they're facing more competition, perhaps pushing prices down. For Regeneron, a key indicator would be the sales growth of their newer drugs compared to their established ones. Are they successfully launching new treatments, or are their older drugs starting to face patent expirations and increased generic competition? This is where a Warren Buffett-style analysis comes in. You'd want to see consistent growth, not just in revenue, but also in earnings, driven by products with strong competitive advantages. In their case, often intellectual property and scientific innovation. For instance, if their revenue from a particular drug grew by, say, 15% year over year, that's a strong signal that the drug is gaining market share or seeing increased demand. But if another major drug saw a 10% decline, you'd want to dig into the reasons. Is it a side effect of a new competitor or perhaps a shift in treatment guidelines? We also need to consider the research and development side. Pharmaceutical companies are constantly developing new drugs. A significant increase in R&D spending might be a good sign indicating they're investing in future growth. However, if this spending isn't leading to promising candidates progressing through clinical trials, it can become a drag on profits without a clear return on investment. In terms of risks, Regeneron, like all pharma companies, faces regulatory hurdles, competition, and the inherent uncertainty of drug development. A clinical trial failure can be devastating, while a successful drug approval can be a massive win. Their competitive position depends on maintaining a strong pipeline and effectively commercializing their discoveries. So to sum up, this Form 8K filing from August 1st, 2025 acts as a gateway to understanding Regeneron's performance in the second quarter of that year. It points us to a press release that would have detailed their financial and operational results. While the exact juicy numbers aren't embedded here, we know where to look and what to expect them to be about. Sales of their vital medicines, their costs, their profits, and their future prospects based on their research. Now, looking at Regeneron's overall picture, they've historically been a powerhouse with strong scientific foundations and commercially successful products. Their ability to consistently bring innovative treatments to market is their biggest strength. However, they do face the industry-wide challenges of patent cliffs, intense competition, and the ever-present need for robust R&D to fuel future growth. A key opportunity for them would be continuing to expand the indications for their existing drugs or successfully launching those in their development pipeline. A notable risk would be a significant setback in a major late-stage clinical trial, which could impact investor confidence and future revenue streams. Overall, Regeneron is a company that has demonstrated remarkable ability to innovate and compete. Their financial performance, as would be detailed in that press release, is the key indicator of their current health, but it's their ongoing investment in science that truly dictates their long-term success. Alright, that's our decode of the Regeneron filing. What are your thoughts on the company's trajectory based on what we've discussed? Do their strategies seem sound, or are there looming challenges you see? Let us know in the comments below. If you found this breakdown helpful, please hit that like button. It really supports the channel. And of course, subscribe for more deep dives into the world of corporate finance. Don't forget to join our Discord community, linked in the description, for even more exclusive insights and discussions. Thanks for watching, and we see you in the next one.